Welcome to this week's look at the state of the New York City real estate market. This report is for the week of October 27th to November 2nd. We're going to start right now with the luxury market. Then I'm going to move on, talk about Manhattan and Brooklyn, and then I'll wrap it up, give you some additional information about the market here in New York City, as well as strategies to help you be successful. If you are a current buyer or seller, you're definitely going to want to stick around for that information. There were 37 contracts signed last week in the luxury market. That is 6 more than the previous week. And we are definitely seeing that the luxury market, no matter what else is happening in the New York City market, is definitely leading the pack. The number one contract was for East 80th Street. It was asking just under $50 million. It was reduced from $59 million when it was listed a year ago. This is a 35-foot wide, 7-story limestone house with 20,000 square feet, including 9 bedrooms, 11 and a half bathrooms, 3 kitchens, and an elevator. The house features a wide, sweeping staircase, a parlor floor with 14-foot ceilings, and ornate details throughout. It was owned previously by fitness and health club entrepreneur Lucille Roberts and her husband Bob. They purchased it for $6 million back in 1995 and renovated for 3 years. Lucille passed away in 2003 and the house went on the market between 2011 and 2013 for $90 million, but it did not sell. The annual real estate taxes, if you're curious, are just under $300,000. Perhaps what's even more notable about this house are its origins. It is called the Woolworth Mansion. It was built in 1915 by architect Charles P.H. Gilbert for Frank Woolworth. It is a very rare home and certainly a very big part of New York City history in terms of real estate. The number 2 contract was the 28th floor at 50 Central Park South. It was asking $29 million. It was listed only back in September. This is a full floor condominium with 6,800 square feet, including 4 bedrooms and 5.5 bathrooms. The living room, formal dining room, library, and master bedrooms span 102 feet overlooking Central Park. The amenities in this 12-unit building in the Ritz-Carlton include a doorman and fitness center. The common monthly charges and taxes total a little over $27,000. The total weekly asking price sales volume, $347,200,000. Average asking price, $9,654,054. Median asking price, $6,460,000. And the average discount from original ask to last asking price, 11%. Average days on the market, 534. Nice showing in the luxury market for last week. As I said, we continue to see the luxury market really leading the pack in terms of our market here in New York City. We're going to move on now, take a look at what's going on in Manhattan, Brooklyn, and I'm going to share some additional information with you that will be helpful to you, especially if you are currently in the market as a buyer or seller. In the meantime, any questions about the luxury market, post those below or reach out to me directly at Sotheby's. So it's possible that we will see the Manhattan market, the fall market, ending on a somewhat of a high note. So while supply has basically peaked, we are seeing that demand is on the rise. I should specify that the contracts being signed are predominantly for those properties that are priced in alignment with the current market. You've heard me talk a lot about the asking price, why that's so important as part of the strategy. Well, in a market that's a little fussy, as this one is, the way that you can be successful is to price your property in alignment with the market position yourself as best in class or pretty darn close to it. And we see that the buyers in the market are responding to that. The supply for last week down about 5%, 280 contracts signed, 252. That's down just a little bit, over 2%. Off market 192. That's up almost 31%. The supply for the month, 1,386. That is down a little over 37%. Contracts signed really jumped almost 26%. 994 contracts signed in the last month, and off-market properties 632. That rose also a little over 11%. Looking at the market pulse, we see it has risen almost 2%. It's up a little bit from last month, definitely up from last year. We'll have to keep an eye on it, but we can see that this balance is shifting a little bit. Looks like it's beginning to favor the sellers. We'll see if it really does. The liquidity pace chart, 30-day moving window of contracts signed, 994. We're definitely seeing a jump. That's up almost 32% from last month. We're going to shift over now, take a look at what's going on in Brooklyn. Any questions about Manhattan, as always, post those below or reach out to me directly at Sotheby's. Brooklyn continues to be a little lackluster this fall. Supply rose a bit, demand decreased slightly over the last week as compared to last year. It's just a bit of a shift for what we were seeing in Brooklyn over these probably last 2 years. Definitely was giving Manhattan a good run for its money, but now it seems that Manhattan is emerging as is showing signs of strength, and Brooklyn is just kind of, let's call it, treading water. The supply for last week in Brooklyn down almost 23% at 168. Contracts signed 126, down a little over 11%. Off-market properties 98. That is up over 88%. Supply for the month in Brooklyn 847. That's down a little over 23%. Contracts signed rose almost 2% at 527. Off-market properties for the month, 278. That is down about 16%. We're seeing a kind of opposite thing going on in the Brooklyn market pulse, opposite from Manhattan. That is down almost 2%. And we see that it's kind of looking like it's favoring the buyers a little bit. This is, again, the balance between supply and demand. The liquidity pace chart, this 30-day moving window for contracts signed in Brooklyn, 528. That's it for Brooklyn. Let's step back now. We're going to look at some additional information, and I will share some strategies with you to help you be successful in these current market conditions. So as I said, there were 37 contracts signed in the luxury market last week, 6 more than the previous week. 10 of those properties were in the trophy category, meaning they were priced at $10 million and above. There were 22 condos, 9 co-ops, 1 condop, and 5 townhouses in that group. The total supply in Manhattan, 6,799. In Brooklyn, 3,620. Pending sales in Manhattan, 2,918. And in Brooklyn, 1,808. Off-market properties, 3,703. Brooklyn, 1,800. Average days on the market in Manhattan, 81. In Brooklyn, 60. The liquidity pace, as I mentioned, Manhattan, 960. In Brooklyn, 538. If we look at the mortgage rates, we can see that, they're kind of bobbing up and down a little bit, but as they move closer to 6%, this could continue to mean good things for buyers in this market. We'll continue to keep an eye on those mortgage rates, but that could help with some recovery that in both the Manhattan and the Brooklyn market. We're going to continue to keep an eye on those rates. So now I want to share some performance charts with you for the 2025 fall season. If we're looking at this from a seasonal standpoint, we're looking at the Manhattan chart right now. September and October are the two strongest months that we have seen since 2022. We've had more contract signings in other markets, meaning in the spring market, but on a seasonality basis, the fall season is shaping up to be the best performing season that we've seen in a while. It may well portend good things for the Manhattan market in terms of signs of recovery. We're going to continue to watch this. It'll also be interesting to see if this fall market extends beyond, let's say, Thanksgiving, which is typically when things would begin to quiet down. We'll have to see. So now we're going to switch over and take a look at Brooklyn. We're going to look at Brooklyn's contract activity over the last 3 years, viewed seasonally. What you'll see is there's this huge move down and then a huge move up, pre and post pandemic. But the thing I want to focus on here is what happened after mortgage rates started rising mid 2022. The Brooklyn market, which seems to rely more on financing than in Manhattan, really took a hit. And it seems that that hit is continuing. Brooklyn has more or less, as you've heard me say, kind of been limping along ever since that. And so while there could well be other factors in play here, a good reason to think, based on how many deals are typically done in Brooklyn with financing, that financing has had that these mortgage rates are really playing a role here. Now, as depending on what happens to the rates, of course, this can change, and it will be interesting to see if that is what is kind of holding these buyers back. What does this mean if you are a buyer or a seller? Well, kind of shared with you that it is important. We know these rates are important. So that affects both buyers and sellers. If you want to be a seller in this market, it's very important that you get in alignment with current conditions. We see the market is rewarding those properties that are well priced. Doesn't mean you have to be giving it away. It doesn't even mean you have to underprice it. It just means you have to be priced to position yourself, at the very least, in alignment with your competition. And if you want to really see activity, then you price it a little below your competition. So the buyers get excited, they want to come and see your property and start making offers. Sometimes that strategy will end up yielding even more money because you have people competing for your home. If you're a buyer, definitely some good opportunities for you, especially with those properties that have been sitting on the market for a while. I would encourage you to make offers if you see something that you like. You know, if you're waiting for the rates to change significantly, or you need them to change significantly, that's a different story. But for everybody else for whom these rates basically work, or you're paying cash, I would definitely say this is a great time for buyers to have some leverage, depending on the property, of course, and how long it's been on the market and whether they have other interest. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.